Hey, good morning, everybody. Welcome to Wednesday, January 27th. Hey, what's on the loop for today? We got a lot of household names coming in, earnings today. We'll have to see how those pan out. But here's the bomb for today. Everything is heading south. Big red day at the open. Dave and I will discuss that and more. Folks, that's why it is so important that you make sure that you know how much risk you have in your portfolio, because days like this are going to come along where we see deep drops in the market indexes. And so you need to know what your risk number is, and you need to know what the risk number is of your current portfolio. And what I see when I sit down with people is most people have no idea what the risk is in their current portfolio. Give me a call and let's go through your financial x-ray to determine what that looks like for you. Give us a call at 863-382-0037. Hey, I look forward to a conversation with you soon. Dave's up next.
Oh, point 7 Light FM. It's Kenny Loggins, Danger Zone. They're high. They call me Morning Dave. We're at 8:40 here, 20 before 9. Time to check in and see what's happening to your retirement funds that are invested in equities and elsewhere. What's Wall Street doing to your money, long and short of it? Time to head in to see what Phillip Statler from Statler Financial Services has going on. Phillip, good morning. How are you today?
Hey, good morning, Dave. Glad to be here. Good talking to you this morning. We had a mixed day. Actually, it wasn't a mixed day. It was a down day yesterday, but it wasn't off by much at all. But let me tell you, it has fueled the fire for today. Get ready, because it's not going to be pretty at the open, Dave.
Evidently, yeah. I was looking at yesterday's close, and yeah, it was an off day, but 22 points, 23 points down on the Dow was kind of an yawner of a day. Ditto for the small percentage drops in the S&P and the Nasdaq. And then all of a sudden, after the close last night, I was following my charts on the futures, and it's selling like a fire sale, and neither you nor I really know any one triggering motive that does it.
No, there's not. I haven't seen anything. I mean,
are you there?
Yep, I'm here. You there?
Yep, now you're back.
Okay. Mm-hmm. So, I mean, we're still having issues, the coronavirus, the vaccine getting distributed, and we're hitting all-time highs. And I think maybe that people just decided to take a breather and, hey, let's take some profits off the table, because maybe we're going to see a little bit of a dip here for a little while.
I did see a couple of my columnists that I follow saying we're overdue for a correction, which is kind of one of those duh, Mr. Obvious things, because we are overdue for that. But there wasn't any one thing. I mean, the news by and large on the vaccine is generally good. The Biden administration is talking about shipping a lot more of it out. Figures coming out of the states, nobody's happy with the fact that we haven't gotten as many people vaccinated as we want, but by and large, we're up to, I think it's 8% of Florida has now been, let's see, 7,800 out of 100,000, so about 7.8%. Of our people have been vaccinated. So we're making progress, not as fast as we'd like, but everything would seem to indicate on the non-financial news front that things are relatively progressing normally. The only thing I come up with is nervousness about the Fed, because the Fed is doing one of their two-day meetings, and we're going to get one of those 2 p.m. releases from Chairman Paulson today, and everybody's going to be parsing those words as to which pronoun he uses at which point in time as to what he thinks the economy looks like. That might very well have them nervous.
Well, it could, because I did see a little piece about being concerned about whether or not they were going to continue this bond repurchasing deal. And there's some concern that they may, and I don't know if it's legitimate concern or not, but they're at least they're putting out there in some headlines that there's some concern that maybe the Fed will come back and say, not that we'll pause, but they will reduce the amount that they were buying on the open market, which means they're pumping less money into the marketplace, which that could give the market some reason to pause.
It probably would, and it would also be an indication that our Fed thinks that the economy is on the right track, and that would be about 180 degrees off of what the European central banks are saying right now. I noticed the European bond market, German bonds are now selling at a negative 0.579% yield. they've been in negative territory for a while, but now it's well over 0.5% negative yield, to give you an idea as to how loose the money's gotten over in Europe. So if we were kind of an outlier, that would concern investors a bit.
Yeah, it would. And I know you're ready just to jump right out there and buy some of those too, right? So you can lose money every second, you know.
Just a high point of my day. We start the morning out with the one bit of macro news that we had this morning of great consequence, and it isn't going to help us a bit. Durable goods orders last month, they went up by 0.2%, but the market was expecting 0.9%, which makes that a cavernous size miss.
Well, it does, and that's what your guys expected. And you know, I've seen anywhere from 0.8% to 1.2% increase in durable goods, and we just didn't see that. So, and that may be adding fuel to this fire, Dave.
Yeah, it certainly isn't going to help one tiny little bit. Yeah, once you got rid of transportation, percentage-wise, it was almost as crummy a miss. My guys were expecting 0.5% increase without transportation included, and we got 2.10. Let's see, we got. Oh, we actually improved that. That was plus 0.7. So we actually exceeded it once we got rid of transportation, now that I'm reading my numbers correctly.
Yeah, it was. And so, but still, that still is, I got to think, is putting some weight on the futures, because I did see about, yep, I'm here. You there? I saw about 8:20. I saw it about 8:25 this morning that the index has started falling even more. So I wonder if that was in anticipation of that number.
That could very well be. Bottom line is we don't have a whole lot of macro good news, and to take a momentum that's not going in the right direction. And there's not a lot of monster good news to be had in the earnings reports either, because one of the big Dow components, Boeing, I know, reported their biggest loss in history. And I don't know what was expected, but I kind of expected Boeing now, with their mainline airlines flying again, to actually have a little bit better report.
Oh, you thought maybe they would bounce back a little bit because of that, huh?
That's a little bit. Now that they're
that may have been optimistic. That may have been a little optimistic there, Dave. I was trying to see what they were expected to report, because they lost like $15 a share. And so they $15.25. I'm like you. I can't find anywhere where it tells what they expected to lose. But that was huge. They had to take an $8.3 billion charge against their 737 MAX program. So they're obviously, we expected them to get beat up today. They're down about 3.5% this morning before we get opened up. But they're really not the worst thing out there. We had AT&T report. They came out and beat both top and bottom line. They did great. Had a good quarter. They did get hit with a lawsuit from a network app company. But so they're having to deal with that. And so they've had some other joint ventures that are giving them a little bit of a fit. They're giving back about what they made yesterday. So they're down about 2.2% this morning before we get going. A big loser in the manufacturing clothing area is VF Corporation, which is the maker of Vans, sneakers, and North Face outerwear.
I was going to ask
they beat by 3. Yeah, and so it's a common household name in terms of their brand. They beat by 3 cents a share. Revenue was in line with what was expected. So they even raised their forecast as folks are working from home. So they're buying more of their type of clothing. But man, they're taking it on the chin this morning. They're down almost 8% before the market opens up today.
I was seeing them toward the top of my big loser list, and now you're telling me that they made all their numbers and they're still getting creamed. That's kind of a picture of the day, isn't it?
Yeah, it definitely is. Hey, I got 2 more I want to talk about before we talk about GameStop. So we had Microsoft come in. They beat pretty good. I mean, they beat by about almost 40 cents a share. So a good thing for them. Revenue topped estimates. Their cloud computing continually has a strong quarter. And so that's some good news for them. Dave, I got to tell you, they're the only thing I have that's green this morning. They're up almost 2%. They'll open at a new 52-week high this morning.
It's about dang time. Got another report before we talk about our buddies at GameStop, or do you want to do that?
I do. Nope. I got Starbucks, another household name, right? They beat by 6 cents a share. Their revenue, though, fell a little short of expectations, as well as their same-store sales fell more than expected also. So as you can expect, they're trading down this morning almost 3% before the market gets opened up today. So let's switch gears. Yeah. So we've got a few more earnings, but I think this is more fun to talk about GameStop, right? So that's been the main focus of our conversation the last couple of days is GameStop. And so it continues to be an item of contention right now. They continue to raise their price. The price keeps going up in this big short squeeze that we're seeing. And so right now we see GameStop closed up yesterday, 92%, closed at $148 a share. This morning, it's up another 58% to $233 right this minute. Yesterday, it got as high as, I think, $358 before one of the hedge fund guys who had shorted the stock capitulated and sold his position, or went out and bought the position to replace the stock. So when that happened, the stock price started falling back down again. So it's interesting. We're going to have to keep an eye on it. It is the focus right now. I call it the big gamble because it is, it is people really and truly taking a long shot gamble on what it's going to end up being, but it still is the headline.
Without remembering exactly much about their quarterly reports, I mean, it's a real specialty store, and you and I have talked about it. It's kind of had to reinvent itself since you weren't buying Atari cartridges anymore. Are they even making any money?
No, they're not.
Didn't think.
Their net margin, net margin was down 5.25%. Their earnings per share last time was a minus $4.18. Their price to earnings ratio is a minus $35.
I thought I remembered that they were one of those businesses that we were kind of almost declaring one foot in the grave on a while ago, and now it's just amazing.
So you'll like this number. Let me throw this one out for you.
Yeah.
Forward-looking PE, which I've got several analysts, that's what they bank their number on. Forward-looking PE, minus $1,286.
Good gosh almighty. Most of this is off of a whole bunch of guys selling them short and getting stuck buying the position back. I love it.
It's a gamble.
It really is. Let's resetting the table. A modest off day yesterday on Wall Street without really a lot of concern. But boy, after the market closed, things don't look too hot. Now before they open, they look even worse. 45 minutes before we open, what do the numbers look like, Phillip?
Dave, they are heading south rapidly. We've got the Dow down 300 points, which is almost 1%. The S&P 500 is down almost 40 points, which is a little over 1%. And we've got the NASDAQ down 0.75%. So everything's definitely looking on the red side. Hey, just to give you an idea, the Russell 2000 down 2% this morning.
Ouch.
Yeah, big ouch there. On the commodity side, we got silver down 1.6%. We got gold down almost 0.7%. Crude oil is down almost 0.2% to $52.53 a barrel.
That sounds familiar, like yesterday morning, though. Maybe we're finally getting back into a stable trading range. Generally, again, up markets over in the Asian Rim before the close this morning. Europe is kind of looking at us and saying, oh, because they're almost universally off in Europe halfway through their day. Phillip, stability counts for a lot. If I were looking at retiring and I had a lot of money in equities over the next year, I'd probably be getting kind of nervous right now. How do I find you to get the risk out of my portfolio?
Dave, it's a great opportunity to figure out how much risk you do have in your portfolio to make sure that it lines up with what you want. Give us a call at 863-382-22 0037. That's 863-382-0037. Hey, catch my website, statlerfinancial.com. We've got links to our calendar, links to our radio shows. I got a lot of good information there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Yep. And if you want a recommendation to put GameStop in your portfolio, shop elsewhere, right?
Yeah, that's right. Yeah, that's a gamble. That's not an investment.
Gotcha. Phillip, thank you so much. We'll see you tomorrow morning. Fair enough?
Oh, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. And remember, we're here to be a resource for you when it comes to your finances and retirement planning. Give us a call at 863-382-0037. We look forward to opportunity to serve you and serve this community that we've grown up in. Take care. I look forward to speaking to you guys again tomorrow. Bye now.